Hello, Oracles. Well, today did not go as I thought it would, at least not for Tesla. I thought for sure Tesla was going to pop a little bit today based on the news that we got on Friday with Elon terminating the deal with Twitter. But with all the different stuff that was going on when it comes to Twitter getting some attorneys involved and they're going to sue Elon because they're going to force him to buy it. A lot of stuff up in the air there, but I thought for sure Tesla was going to jump a little bit today, and it did the complete opposite, dropping 6.5%. But let's also look at the entire market. The entire market was also red today. We had the S&P down just over 1% and the NASDAQ down 2.25%. So to me, it seems like, and some of the headlines are pointing this out, that yes, we are expecting very high CPI data coming out on Wednesday. Even the White House is saying to expect high inflation coming out. 8.8% is nothing to laugh at. That's ridiculously high. We're looking at an 8.8% year over year headline number, and we're looking at a 1.1% month over month number. So with those numbers involved, we kind of knew this coming into it, but I think what the tipping point was today was a lot of people are starting to look at earnings, and yes, we are facing what is most likely going to be an earnings recession, and now that's starting to get priced in, and the sell-off has most likely begun for this. Now, Abhishek had pointed out that the last time we had gotten CPI data, the week started off very similar. We started off with a sell-off going into CPI data, we got the CPI data, and then the stock market went very green afterwards and rallied hard. But then the next day it sold right off again and was even worse than it was the day before. So are we going to see the same thing? Nobody's going to know until we actually get to the day, until we get to Wednesday and Thursday with the CPI and PPI data. But looking at how we've been trading and looking at how a lot of people are anticipating, we are going to see a much bigger pull down. The S&P getting down to 3,400. Is this the start of that pull down? Now, to be honest with you, the next year and a half, it's going to take patience. You're going to need to be patient to be able to get through all of this. We've gone through these times before, maybe not as bad as sometimes. The housing recession was very deep and very painful. The dot-com bubble, very deep and very painful. And when you're going through it, it just seems like forever. And we've talked about it before where you can go through a bear market for, 2 to 3 years and then a bull market for 10 years, but they seem like they're the same length of time because the painful times just seem like they're that much longer. So we may be going through that. We may be going through some sideways and painful times for a couple of years. Again, we will not know until we actually get through it, but this might be that last pull down, and hopefully we can get this pull down, hit what we know is going to be a bottom, and then just kind of wait for the market to rebalance. That's really where we're at right now. We need a rebalancing of not just the market, but the economy in general. Like everything is all over the place. We are just completely scattered. It's like somebody took marbles and just threw them out into the wild, and we've got to gather them all back up. Because right now, it's just crazy right now. And we've got housing market that we've got interest rates that are going up, but we've also got inflated housing prices. And we've got inflation that's still high, but we've also got a hot jobs market. And we've got consumer spending, which is still high. So things are all over the place. The Fed is raising interest rates, doesn't seem to be even making a dent in the inflation whatsoever. We know that it usually takes 6 months for the inflation to be affected by the interest rates going up, but it doesn't seem to be phased. We are starting to see commodity prices pulling down, but it seems like everything is pulling down at the moment. And it's probably not a bad thing. To be honest with you, yes, these times suck. I would love to see a bull market. Most of us, I know many of you have been trading for a long time, but many of you who have been investing for the last 5 or 10 years, all you've known is a bull market. That's it. So these times right now are unusual. We had a little dip in 2018, and then we had the COVID crash, but both of those were short-lived. We haven't had a long, drawn-out, painful time like this since really the housing market crash in 2008 and 2009. So with that said, for those of you who have been through this, please share your experiences in the comments below to let other people know, what it was that you felt going through it, how painful it was, your memories from that time. I was not investing at that time. I was working at Home Depot during that time, so I know what it felt like to be in the housing market, because we were selling Home Depot type goods. At the time we had to switch from that whole new home building mentality to let's refurb the house because the housing market is completely demolished right now. So we're kind of going through a phase like this right now where everything is coming down in price, nothing looks good to buy. You're going to need cash, cash flow, and patience. Those are the three most important things you can have right now. So right now I'm building up my cash reserves to buy a house and to keep some in my portfolio for the stock market itself. I have cash flow coming in. I share every week. I put that on my Patreon. I share my updated income and cash flow statements there, and I'll share them with you guys on a monthly basis here. And then I'm still dollar cost averaging into the stocks that I want to be in, dwindling down on those and making it really mostly Tesla, but I'm putting more cash into the stock market as well, just sitting in my portfolio waiting. And then that's where the patience comes in. And you just need to be patient. Find a strategy that works for you, and it's okay to tweak it. I've been tweaking all year long, adjusting little bits here and there, but I kind of sensed it from the beginning that it's gonna need cash flow generation. I had said this all the way from January. That is what is going to rule the day at the end of the year, and that's what's gonna rule the day when it comes down to any companies that you are going to be investing in. If you are one who's dollar cost averaging, or you have money that's going into the stock market right now, those are the companies you're going to wanna be in. I'm not a financial advisor, but it's pretty clear cut that you do not want to be in stocks right now in companies that are not profitable. Not going to be a wise move. So when it comes down to it, you want to look at companies that have cash flow generation, giant stockpiles of cash, and you're going to want to have companies that have a large pricing power and demand coming in. Because these are the companies that are going to continue to thrive during these painful times. And if you do the same for yourself and your own portfolio and for your own budget and finances, then you're going to do well getting through this. That is how we're all going to thrive through these times. So having that strategy set up, and again, I'm not a financial advisor, this is just what I'm doing for myself, but seeing as other very successful companies are doing it and other very successful investors have done this in the past historically, that is what I'm going to mirror. I was a history major, so from me, I learn from the past. I don't know what the future is going to bring, but I can see similarities between now and times that we've gone through in the past, and I'm going to mimic what people did in the past to thrive to come out of this. We talk about it many times on here that fortunes are born during bear markets, and the people who created those fortunes had cash flow generation, had cash, and patience. That's really it. So that's what you need to do and have during these times is those three things, and you will be very successful, in my opinion. So now looking forward, we've got Q2 earnings coming up after CPI and PPI data. Now we're continuing to come down. Are we going to see this pullback in the S&P to 3,400? Don't know. Again, it's the number that's being thrown out there. And you think about numbers and how the majority of trading right now is done through algorithms. So if the people who are in charge of these algorithms have put 3,400 in for a bottom level for the S&P, inevitably those algorithms are going to work their way down to them mathematically based on how the economy is moving with CPI, PPI, earnings. And again, if we do get this weakened earnings round here in Q2, which we are expecting, there's a good chance that these algorithms are going to find reasons to bring the S&P down to 3,400. Now again, when it comes to that point, we may just touch and bounce off of that 3,400 with the algorithms and the way they're going. Again, we don't know all of this, but that's how the numbers work. So again, I mentioned it yesterday when it comes to Tesla, where if we're looking at a PE compression scenario and the EPS is going to come in lower than Q1, that is naturally going to bring the PE up, which means that it's going to need to get compressed down, and we might get a sell-off to bring the stock price to a level where that PE should be based upon the algorithms that we have. This will hold true for all of the other stocks that are out there. And it seems like many of the companies that we are about to go through, especially with tech, are going to be seeing an earnings hit coming on. So if that happens, we'll see the compression come down again because the PE ratios are going to jump based on lower earnings, and that's going to need to get compressed down, which will in turn bring the stock prices down of everything, and that in turn brings the S&P down because the S&P has a lot of these large companies in it as a fund, so it will naturally get brought down. And as that gets brought down, it will bring other companies with it that then in turn could hit a domino effect of anybody who is in margin or anything getting margin calls, triggering sell orders, and that brings the stock prices down some more. So again, I'm not saying this is going to happen. This is just a possibility based upon what we have been hearing from other people and numbers coming to a 3,400 level for the S&P. And other levels that we have heard are with the NASDAQ, with an 8 or a 9,000 level coming down to as well. Now we're at 11,372 in the NASDAQ right now, so to pull down to 8 or 9,000 definitely has a ways to go, but again, if we are going to go through this Q2 earnings season where we're going to see a lot of compression compiling on top of everything, we might actually see those numbers get hit. Now again, personally, I think Q3 and Q4 will be stronger, at least for companies like Tesla, who have been building up and are still on a high growth trajectory. So I think they will be fine and they will help pull things out of it, because looking at Tesla trading by itself, Tesla's basically been trading sideways in a range from 620 up to 770. Very strict line that we've been in for the last couple of months. Whereas the indices have been coming down, not trading as sideways so much. So Tesla, while it has been swinging significantly more on a regular basis, might actually buck that trend. Maybe 620 is the bottom for Tesla. That's going to be a level that we're going to test, and we'll discuss that more in the morning. And when it comes to all the indices, we may still have a good chunk of a way to fall. And now, of course, hindsight is always 20/20. Many of you were talking back in February saying now is the time to just sell everything and sit on cash. Some of you did that and you did very well. I was dollar cost averaging because to me that's just the easiest way for me to go about it. Looking back, sure, it would have been wise to sell back in early January when everything was pushing really high up, and then just sitting on cash and waiting till now. So I've dollar cost averaged, looking at the information that we have now, seems like we're going to be in this type of situation and atmosphere for quite a bit while longer. So because of that, I am just changing my strategy slightly, getting to some levels I want to and some stocks that I like, and then just putting the rest into cash or Tesla and just waiting it out and using the patience part of the 3 key pieces of success that we will have going through all of these times. Now again, I don't know when we're going to come out of this. Hearing lots of people talking about end of 2023 or 2024 might be when we actually start to come out of this. We may bottom well before then and then trade sideways for a while. For me, I think that's worst case scenario is we will hit a bottom in the next 6 to 12 months. We will trade sideways for another 6 to 12 months after that, and then start to climb out of things by like 2024, and we'll start coming out. That to me is probably worst case scenario, but I'm constantly monitoring what is happening in the market, what's happening in the economy, and adjusting along the way. So that's just my personal strategy, but again, I'm staying an agile investor because you never know, maybe all of a sudden inflation does fall off a cliff, the Fed decides to U-turn, and all of a sudden we can see the stock market rally come September and October. So many unknowns could happen in the future. This is why I have a prepare for the worst and hope for the best type mentality. Let me know your thoughts in the comments below. How bad do you think things are going to get going through Q2 earnings? Do you think that we are going to get this pullback to 3,400 in the S&P and 8 to 9,000 in the NASDAQ? Or do you think that we are not going to get it as bad as we think, a lot of it is priced in, and then the Fed is going to U-turn come September and we're going to go green sooner than we think? Let me know which end of the spectrum that you are on. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all the latest Tesla news, pertinent stock market information, and all of my daily trades. We do have a Discord chat. That link is down in the description. And if you'd like to support the channel any further, we do have a Patreon. That link is also in the description. And I also just noticed that I'm wearing green today because I was so used to wearing green all last week, and I was hopeful, so Yes, I was wearing green, and it should have been red, but hey, you know what? Let's think on the positives and let's get some bright silver linings, and hopefully we will have some good CPI numbers coming in because I was wearing green today. So anyway, I will see you guys all later. Thank you so much. Have a great one.